Alright guys, welcome back to the channel. So, weekly review time. Now, admittedly this is a late recording. Yeah, it's a late recording. Not ideal. Typically you want to get your weekly reviews done on a Saturday, Sunday, whichever. Um, it's just better, it's fresh in your mind and so on before the new weekly candle prints, which obviously, as you can see, is started print. So I'm really late with this, so apologies with that, but I know that some of you get some really good value, some insights into how I put together or how I go about my weekly price action journal. So let's get into it. I don't want to take too much of your time because I appreciate that this is late. So maybe we keep this one short and sweet, but still packed with information, detail, and so on and so forth. So looking at the weekly chart. So we look at last week's price action. So forget this candle here. This candle. The market closed bullishly, where I had noted the reprice and rebalance here of the BC weekly. So that was supporting the idea of higher prices rejection, and then we saw a continuation through. This old high here, as we can see, the market displaced through and closed above. So I was anticipating a continuation of higher prices, which we got. Then we had this BC here, which currently was on field. So my view was that we would likely see further higher prices. However, if there was an opportunity for near-term lower prices, so an external range liquidity to internal range liquidity, then we could potentially look for that. We would need to see a high time frame correlation up here at the highs on a lower of the higher time frames to support the idea of lower prices into here. But ultimately, I was looking for higher prices, but I did leave the caveat that if something was to form at the highs in alignment with my models or the way that I view price action and analyze price action, we could see lower prices. So dropping down to the daily, we've got the dealing range marked up. So this is where I deem the dealing range is. Cracking correlation occurred down here within this BC weekly. So from this low to the high. So I noted the purge of liquidity up here. Right, and yeah, purge of liquidity up here. Then we had ultimately the SMT. So to me, institutional order flow was bullish. Right, it was to the upside, displacing through old highs whilst manipulating old lows. Right. So as I mentioned up here, the liquidity purge above this old high and a rejection, potentially setting the stage for lower prices. And ultimately, that would bring, in my opinion, into question the BC weekly. And as we can see down here, we have a BC daily as well. So that would bring into question a run to a discount market PD array, ideally. Now, admittedly, this is a discount PD array, but in terms of the range, likelihood, not definitive, but to a discount market in terms of potential higher time frame objectives. So we saw that the market repriced lower during the first part of the week. So if we look at Monday here, market repriced lower, trading down into the discount PDA. And as you can see, the bodies of the candles respecting this BC weekly. And naturally, or as we can see, ES trading down into this BC daily, whilst NQ traded and purged its old low for the previous weekly low. So I would look for a cracking correlation at the lows to support higher prices. However, the market did not form that. We had this retracement, repricing higher. And the market can still target these highs. There's nothing to suggest that that's not the case. But the market ultimately repriced higher. I noted high time frame SMT up here, both on the monthly, the daily chart and the week and the 4-hour chart, to close the week lower prices. So again, disregard this candle here. Close the week lower. So a little bit more here. Let's really enlarge this and see what's what. So the market opened displaced lower, displaced because we left this fair value gap, right? So it left this SIBI. And then we saw how the market came up, repriced, rebalanced the SIBI here, then continued lower. So continued lower, formed the low of the day. Following the confirmation of the true week open here, the market traded lower and purged previous day's low. So for me, this formed SMT with NQ, supporting the idea of higher prices, which we saw. Market traded higher. We do have an inversion here. We do have an inversion and actually a BPR if we extended it further. So traded higher but failed to take out this high. Okay. Which is important in itself. Okay. But it traded higher. Excuse me. With NQ, and NQ obviously was the higher low here, supporting the idea of higher prices. Okay. Right. Okay. So we saw So we had the SMT up here, sorry. So we had this SMT setting the stage for lower prices. Okay, failing to take out this high, SMT with NQ above the true week open, set the stage for lower prices, and then we saw how the market consolidated a little bit for the remainder of that day before we saw this big displacement lower down into the BC weekly. Okay, trade down into the BC weekly and in further into the BC daily before this retracement back into the SIBI. So this SIBI was important. We traded up into it. Bodies of the candles respected the SIBI. Now, interestingly, the bodies of the candles, though, did violate CE. So that tips its hat to you to suggest that we could be seeing higher prices, especially if on NQ the bodies of the candles had violated the same SIBI. So the market traded lower, failed to purge previous day's low Q3, forming high time frame SMT with YM. Okay. Below the true week open, setting the stage for high probability longs. Now the market did reject, trade higher, and then we saw this consolidation inside of this SIBI. So one would think at this point, well, maybe this SIBI is actually going to reject price and we'll see lower prices. maybe so. But what we wanted to do at that point was see what was happening on NQ, and I believe on NQ we were, I believe at NQ we were trading above the true week open. Sorry, true week open, above the SIBI, the relative SIBI, or certainly close to that high. So the fact that the market was spending a lot of time in here would suggest that there is a chance, coupled with the SMT at the lows below the true week open, it's a chance we're going to be trading higher, and that's what we saw heading into Friday, where the market found support and ultimately displaced higher, purging the previous day's high and the previous day's high of Q3. Excuse me. Then up here, there's a bit of an overlap, so bear with me. We had the previous day's high, Tuesday, there. We had SMT with NQ, and we had a higher time frame SMT with NQ up here, supporting the idea of lower prices, which initiated the lower prices on Friday, New York PM session, where the market repriced lower, closing bearish for the remainder of the week. Okay, so there's a lot going on here with this price action. This price action this week was a tough one to crack, and it was very, very limited opportunities. It was important to be patient, stay on the right side of the market, which was extremely difficult. But this is where you have to stick to your principles of how you analyze price action. In certain cases, you're going to be wrong. That is fine. The market will allow you the opportunity to get back on side through various different confirmation strategies and so on and so forth. Was a difficult week. I certainly didn't take much from the week. Still managed to take something, but not much. And maybe this week other markets would have been potentially more fruitful, i.e. gold. So let's drop down to the hourly, where it gets a little bit more inundated. And we're going to go to about here. Okay, so on Monday, which is around here, is it there? Apologies, here. So the market opened, repriced lower before essentially repricing higher to set this BSL H1. Okay. Then we got the move lower to set the the SSL H1. So we've got now this range. We then saw the market reprice higher into that SIBI H4, purging the hourly liquidity pool before displacing lower and purging the sell side liquidity pool. And that ultimately set the low of the day. Okay. And then we see this retracement back into the daily range. So that is, in essence, a seek and destroy day. We're taking liquidity out on both sides of the market. Okay. So then we move into Tuesday. Now we've had the true week open set. The market opens below the true week open. So that, in my opinion, supports the idea of high probability longs. Trades down, purges the previous day's low, whilst also purging the sell side liquidity pool of London. The market then reprices, displaces higher, trading to and through what would have been a SIBI, but converted into an inversion fair value gap. And the market then continues higher. purging this London buy-side liquidity pool and ultimately trading higher back above the true week open and setting the high of the day. We then see this small retracement back into the range before consolidation heading into Wednesday. Now, as mentioned earlier, this market condition for this week was a tricky one. Now, don't get me wrong. There'll be some people who will say, no, this was pretty straightforward as well. And that's fine. That is fine. I found it to be one that required a lot of patience. So for me here, full disclaimer, on my challenge account, beautiful trade. However, took a loss on my funded account, which was annoying. However, I always live by the mantra, we don't lose. We either win or we learn. Okay? Don't lose, we either win or we learn. And here provided an opportunity for me to learn an element of my trading model, specifically around my entries, that was not clearly defined, rule-based. So I used that opportunity to reevaluate my steps, the things that I look for, and ultimately the element that would have resulted in me not taking the initial trade, which was a loser. And then ultimately I got in. So managed to take 2 trades, 1 loser, 1 win, and off we go. So take these opportunities to learn. That's the beauty and the importance of your weekly and your daily price action journals. That is the beauty of them, is to ensure that these things give you an opportunity to learn. And that's what I took here. So I refined that, went through an element of testing. So again, we don't just, certain things, yes, you can see it's obvious, it's a mistake, or it's obvious and actually that needs further confirmation, or whatever the case may be. And it's a very simple fix, and you put that fix in and it's kind of like, okay, fine, that makes sense. Yeah, that's perfect. Now, it doesn't mean that this is a panacea and that you will never take a loss. It just means that in terms of a rule-based system, these are the things that I follow. That was an area of, I want to say, uncertainty or lack of clarity. You've now provided specific details in terms of what you need to do, and then you move forward with it. And in this case, mine just required an element of data gathering, just a little bit, just to ensure that there was significance behind what I wanted to implement, and that it would more often than not result in a positive yield and a positive trade situation. So that occurred here for this trade. Okay, so as we head into Wednesday, the market ultimately is consolidating during the London session, as we can see, creating a tight range, setting the Asian range high and the Asian range low. We then see the market trade higher, purge the Asian range high, the buy side liquidity pool, before displacing lower aggressively all the way into the BISI weekly and ultimately into the BISI daily. We then see during the New York PM session this retracement back into the daily range. Okay. So then we move into Thursday. The market open with prices higher into this SIBI H4, purging the BSL London high. London high, we purge, ultimately creating the high of the day. The market then displaces lower, where we then have this inversion fair value gap type BPR, whatever you want to take away from that, and ultimately purge the SSL H1 here, whilst also trading into this BC H1. But it's important to note how the market failed to purge the previous day's low here. This formed SMT, the high time frame SMT, with YM at the lows below the true week open, again setting the stage for high probability longs. The market ultimately reprices higher back into the SIBI, where we see this consolidation for the remainder of the day. We head into Friday, where the market opens, trades just below that true day open, and purges the SSL AR, so the Asian range low, before we then see this displacement higher and purge the previous day's high. Now I note market symmetry here, where all the other members of the index future triad all purge this previous day's high. So that in itself informs me that we're looking for, if we want SMT, it's going to have to occur higher and at the true week open. So we see how the market continues to trade higher, purges the previous day high for Wednesday, trading up into the true week open, where we have the overlap of SMT at the highs. Before the market displays lower and closing bullish for the remainder of the week. So that, in a nutshell, is my analysis for the week. It's a real interesting week. There was a lot to take away from the week, despite, for me, the low frequency of opportunities. There was a lot to take away. Now again, I'm not a trader who wants to necessarily find a move every day, but if it happens, great. If it doesn't, not too disappointed. If I get 1 to 2 solid trades each week, happy with that. So this was a interesting week. We saw price gyrating higher and lower. I still think ultimately higher prices are likely. There's a lot of stacked liquidity or low resistance liquidity above the marketplace that can still be targeted. So I'm anticipating the market to trade up there. So again, identify your key observations for the week, your key takeaways, document them down, add anything that is necessary and pertinent to your trading plan or model, and then move forward with it. So hopefully you took some things away from this. As I said, it was a difficult week, but it was one that was still rewarding if you submitted to patience. Challenging week, but again, as you know, in addition to that, with the US elections fast approaching, the markets are somewhat likely to range to an extent before the real volatility kicks in. Okay. Now, one thing just to note, the week was quite sparse with news. And oftentimes people will think that means, okay, well, if there's no news, I shouldn't really trade because the market will likely consolidate. Well, that's not entirely true. Certain days are primed for consolidations, i.e., in many cases, a Monday, for instance. I personally don't trade Mondays. Personal choice. I'm waiting for that Monday range, or just to get an idea, and also as well, I want to see where the true week open is, and so on and so forth. Having said that, we do know on days with no high impact news where there is going to be some volatility injection into the market, and that is at equities open. So my advice would be on days like that, just wait for equities open for the injection volatility to occur, and then you frame what you need to frame, or you sit on the sidelines, or you do whatever it is that your plan advises for you to do. But my point being is that when we have a no news day, we know that volatility on that day is likely to occur, or is certainly going to occur at equities open. Now, that doesn't mean we don't get any other elements of volatility spikes in the market and so on. I'm just making the point that if in doubt, the equities open is where you need to apply your focus in terms of where the next likely impulse price swing will occur. So anyway, hopefully you took something away. Appreciate you guys watching, and I will continue to do this, and my aim is to get back on track, get these out sort of Sunday morning UK time, which gives everyone more than enough time to watch. I've tried to shorten the time of these as well, just to make it more digestible to people, and hopefully you managed to take something away from it. So hopefully catch you guys in the next one. Have a good, successful trading week, and I'll see you next time.